Well, hello everybody. Doing a quick video, my weekly update. This is Paul. Today is 4/8/2021, and the market is open currently. It is 1:27 p.m. Central Time, and I am doing a quick little video just to kind of show some portfolio moves, different things I've sold out over the past week. Um, Different dividend type increases I've had. Just kind of looking at ways I've moved money around and kind of my logic behind doing that. So right now the portfolio value is sitting at 53,791. I had a pretty remarkable Monday. I should have made a video on Monday, so it looks like I'm some kind of financial genius here. But Monday was pretty crazy for the market. Market just opened, shot up, stayed there, and then now for the next 3 days it's just been kind of sitting around, kind of as you can see in this little trend line right here. Nasdaq's doing pretty good right now. Obviously rates have been kind of going down. I saw an article from I think it was like a Japanese article, basically saying that the Japanese insurance companies, if our rates hit certain levels, they would dive back in. And I kind of wonder if that's what's going on. You look at Japan, they have negative rates. If you look at EU, European Union, they have negative rates. If you look at the United Kingdom, for example, their rates are super, super, super low. So if you're trying to get a yield on 10-year or 30-year debt, I mean, if you just look at the UK compared to the US or Japan, for example, I mean, 0.09% on a 10-year compared to 1.6, that's a big difference. So if you're in an insurance company or a pension and you can't have all, by law, you're not allowed to have all your money exposed to the market, you got to have some kind of bonds. Well, guess what? You're buying US bonds, and the biggest beneficiary are these guys. Also, on days like today, this is kind of an interesting thing. You get things like Peloton going up or Zoom going up, and that would probably be because not everybody's doing as good as the U.S. when it comes to vaccines, because this makes no sense with the U.S. reopening. This doesn't make any sense, especially with things like Zoom. When I see things like Zoom and Peloton, that's you can automatically just assume that's the COVID trade. Especially when you look around and you see, where's that? I thought it was here earlier, but you see things like Marriott and the different cruise lines selling off. That's a pure COVID trade. It's like all of a sudden, it's so weird how Wall Street is sometimes. Like all of a sudden, we're just gonna all of a sudden sit back and get our teeth fixed and do Etsy all day or something. Projects around our house or something. It's so weird. But that's Wall Street. That's Wall Street. They get the inflation and they call it the reflation, which is this stuff, and they get the reopening trade mixed up. I don't know who's pressing buttons up there, but they're weird. But I don't. It's weird. So Nasdaq's doing pretty good today. The stocks that I typically invest in just kind of flat, but whatever. I made a huge chunk of change. If you look at my performance so far for the year, for year to date, I'm pretty much currently outperforming the entire market. If you subtract out, if you still beating the Nasdaq for the year, as you can kind of see, it's just been kind of Nasdaq's been kind of trailing down here, and then it's just been kind of it's going up. It's starting to catch up after April 1st, but if they get the stimulus or the infrastructure bill through, that's more debt. It's got to be financed. Somebody's going to have to finance it. Japanese insurance might jump back in, but there's no telling what they'll do. And then also there's the fear of inflation. So one of the things that kind of got me thinking about this inflation thing was, is it real? Like, is there real inflation somewhere? Like, people have noticed the gas price go back up, but that's because the economy's reopening. Okay. But is there real actual inflation? Well, if you look at the price of copper, if you kind of click on the copper right here, this is why I kind of like CNBC. Yeah, definitely up. Now let's go out 5 years. Okay, what's going on here? Is that Tesla? Is that a reopening trade? Is that country stockpiling? Is this China stockpiling copper? You know, um, and then you can kind of go into these different commodities, and these are called commodities. But if you go into wheat, let's go into wheat. You just kind of look around and just see if it's real. So just go out to the 5 year. Okay, wheat's more expensive. That means it's actually trading halted. Look at this. This is a huge price move. You only get these kind of stuff is if you have huge droughts and all of a sudden you lose entire grain supplies. This kind of stuff. Okay, this is going to feed through to the real economy. This type of stuff right here feeds through to the real economy. And you can see this yourself if you go over to just CNBC has it. You don't have to have some kind of like special access. Um, anything you really click on is kind of doing something right now. This isn't a reopening. So this is where it was during all of the Trump administration, kind of like under Obama over here, and you kind of see, but then all of a sudden, this is something different. And this is corn, okay? So corn is literally in everything, and look how much it's going up. You could pretty much see this with a lot of different things. The problem is that all of this feeds through to the real economy. It's coffee. Like something is kind of like coffee is actually pretty good. Actually, there must be enough supply, so that's actually really good. But soybeans, so like this would be tied to something closer to like say China, just large demand. But look at this. And it recently started right around the exact same time that the vaccine started to come out. So what's kind of going on is that basically supply has not kept up with demand. So all of a sudden, because what happened is during the coronavirus, everything kind of shut down. Literally, the world pretty much shut down. And then it's coming back super, super fast. And the jobs numbers prove that. So you just have this super, super ramp up. March of 2009, for example, is when everybody kind of agrees that the market started to recover. But it still took 4 years or so after that to get all of the jobs back. I mean, these guys are talking about being back down to, the unemployment levels you saw under Trump and Obama by November, definitely by December. So all of this is going to feed through to the real economy because people have to still run their businesses. People still have to make cereal, that kind of stuff. You use corn for that. Corn's pretty much used in everything, alcohol, that kind of stuff. One guy kind of gave an example. He showed a thing of all the different things that have gone up by just these incredible prices. One of the bigger things that I saw that had gone up, a simple 2x4, is now $7.88 at Home Depot. You could look this up yourself. Just go to homedepot.com, type in 2x4, and you'll see this yourself. You might be wondering, well, why is that so special? This, not even 4 months ago, if I'm correct, I remember looking at this because I go to Home Depot, was $2.30. This is what is used to build your house. So this is going to feed through to housing. So the Fed keeps saying this is temporary, temporary, temporary. It could become a problem. It needs to be watched because the only way to slow down something like that we haven't seen in quite a long time is to raise interest rates and slow down the money supply into the economy, which, kind of how you get a recession. It's kind of how that works. Everybody knows how that works. But if you're looking at these numbers and they just keep going up, like if all of a sudden I do a video in 2 months and all of a sudden this is $10 and it's not going down, this is going to have massive consequences for the economy. You will see housing slow down because the cost to do business will just be through the roof, and especially if you see these huge, huge jumps. So it's something that everybody's got to watch, and it could spook the market. And what that means, you're going to see this. If you see real inflation come through, you're going to see these rates go up. And a lot of people are saying 3% on a 10-year is a real thing. And that's going to hit the NASDAQ. I don't know when that happens. it could be transitory. This all of this could all come back down as supply, as everybody comes back to work and all the people chopping trees and all that stuff all go back to work. But if the demand continues to outstrip the supply, these prices are going to go up, and you're going to see those charts that I saw you before. You're going to keep going in a straight line up until you get a recession out of it, because you can only get so expensive. So we have to kind of see where that goes. So that's where I'm at on inflation right now. It does look real. I mean, because you can just see it yourself. If you just take any of these charts, especially the big thing, copper, wheat, um, corn, for example, all of them are in a straight line up, and it's very far past the trend. The trend was prior to, like, say prior to COVID. It was very much lower. Now all of a sudden it's jumped. So if it stays there, we got problems, because you are going to see this at a grocery store. You go to a grocery store, everything's made with wheat, corn, that kind of stuff. You're going to see higher prices, because that's just how this works. So we'll have to see how much it feeds through. But it might be some kind of like thing from a year or two from now where it's like it's a big thing if it doesn't get under control. If it doesn't go back down, we have a problem, because then the Fed is going to say, okay, remember all that stuff about not raising rates? Well, here go the rates. There go the rates. And once that happens, you start seeing lots of things. You start seeing people move out of risk. They start moving into safety, like utilities, that kind of stuff. You'll see it coming, because you could see it coming from a mile away before. Good example, I guess, would be something like Duke, probably. You start to see people pile into utilities. If you go to, like, say, a 5-year, when people think that there might be kind of a slowdown coming, because this was right before the Fed started lowering rates. Where was it at? Over here. You start to see people pile into utilities throughout the year, but when they really think something's about to happen, look at what happens, and then they dump with the rest of the market. You might be able to see it. This is the all time. So here's another one. This is right before the tech crash. Right here, you see how they jump into it right before the tech crash, and then boom, they dump, just like everything else. They dump for a while, because everybody gets out of utilities all of a sudden and goes back into the market. So they go into safety. That's pretty much what they say. They go into safety. As soon as they see that first dip, they dump their shares. And then this is kind of 2008. You can kind of see it right there. Kind of right here. You can see it. Boom. And then they dump, and then they all go back into the market. You can actually see it with municipal bonds too. If you caught on the wrong side of a trade of a municipal bond, they do the exact same thing too. If you go to a chart of a municipal bond, this is one that I hold. You can see right here, go out to a 10-year. These do the exact same thing. Whenever people think that the economy is going to start to slow down, you're going to see these guys run up. And this happened right before an election too, right here. Was this? This was. This was the taper tantrum. So you had people going into these thinking the economy was going to slow down in Obama's second term right here, and then when it didn't, got out of safety, back into the market. And this is the exact same thing right here. Safety, 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 and then all of a sudden, we got an election coming up. That some stuff might happen. Trump might be this crazy guy who puts up tariffs everywhere, and then all of a sudden he gets elected, and all of a sudden the market likes him again. Look, you can literally see when it dumped. November 1st. Literally same thing right here. People pile in. This is when you first started to hear about the coronavirus. You first started to hear about the coronavirus right there, and then all of a sudden they dump, and then some people jump back in, and then some people go back into the market. That's a very municipal bonds are a good way. There's some of them that go all the way back, but you can kind of check those types of things. So you'll see it coming. There'll be marks, and smart money typically gets out first, and then rest of the money stays in. People start reducing their portfolios and exposure to the markets. So you'll see it, but we'll have to see how it goes. So it's you can see it coming from a mile away if you actually look at the charts. So let's see some portfolio moves that I made. So in my last video, I said one of my bigger things that I wanted to do was get everything kind of even. and that's effectively what I've been doing for the last week. So if I go to all my different transactions, and this is with barely transferring any money into here at all. I think I transferred like 30 bucks. But since my last video, which was, what, 7 days ago, these are all the different dividends I paid out, but these are all the different portfolio moves that I've made. Basically trying to increase my positions in stocks that pay out in April, or basically those in-between months as I call them. But these are the big months for payouts. This is the month prior to that, and then this is the month we're in. So if you look at it, the next time around will be July. This previously said like $80, I think, in my last video, or maybe $90. I got it up to 147. The way I've gotten it up to 147 is basically redistributing money from my winners to pretty much things that pay out in April, or things that will pay out in July. So if you look at it, I sold, say, 2 or 3 shares of Home Depot, because what's going to happen is especially with Home Depot, and this is one of those COVID went up because people say it was closing down things, but this is also just one of my winners. But what's going to happen is that people will slow down buying at Home Depot, because the prices will get to a point where contractors will just draw the line and Home Depot will lose pricing power. It's just going to happen. I've never seen 2x4s at $8. I've never seen that. I've been going to Home Depot for a few years, and I don't think I've ever seen 2x4s that expensive. That's a crazy price, considering if you think about just how many 2x4s you need to build a house, and that's not even looking at plywood. These big sheets of plywood, I want to say something like this right here, maybe used to cost 25. Now it's up to 37. This is what they use to build houses. Like, this is gonna have feed-through effects, like pressure treated lumber, like, $14. Like, this is insane. Yeah, this is the stuff you use to build a fence. Like, this is directly hitting the consumers. This is real. So definitely need to, definitely need to just keep watching this to see where it goes. I'm sure contractors are looking at this and they feel it. They feel it really hard. But so what I've been doing, I took up my position back in, this is Leggett and Platt Industrial Company. I've pulled a little bit out of Caterpillar, like I think 2 shares. I'm still 70% up. It's still a winner. This is one that pays towards the middle of the month. So what I've been trying to do is centralize a lot of my stocks that pay out towards the beginning of the month, with Main and O at some point being kind of the stocks that will be my middle of the month thing. So what will happen is basically I'll have big payments at the beginning of the month, and then I'll have big payments towards the middle of the month. And that's kind of how I've been setting everything up. But right now, that's kind of the plan. I've upped my exposure to PPL as an example. There's one that just pays out on this off month. This is my AT&T holdings. Just different things. Right now, I think I don't expect to make many more moves in April, because after you get a 7% return for 1 month, and then all of a sudden you're already at, for the year so far, you're already at 845. That's actually pretty normal. It's actually pretty good. I know the options guys might laugh at me for saying that, because they're used to 500% return and stuff. They hope, but when you get these kind of months. But I think the recovery trade, the rotation out of tech and into these other stocks, is probably going to continue at some point, pretty soon, I expect. We'll have to see, because rates are going to have to go up one way or another. And then I think once they get up to maybe like 1.8%, you'll see more buying. So maybe May might be a repeat of April, where you kind of see this kind of go on. But this tech trade, this stuff right here, like the Zooms of the world, DocuSign, like what is this rallying on? There's literally no news that justifies any of this. Even if I go to CNBC right now, literally Florida is suing the U.S. government because cruise lines are shut down. Um, nobody's talking about shutdowns. The only people that even remotely talked about shutdowns was Germany, and they talked about it for 2 weeks. But you get these massive 7% run-ups, and I guarantee when you walk in here tomorrow, this will probably be down 7%. This is such a weird thing. I don't know who in Wall Street decided this, but these are the stocks that rally whenever they think COVID's back, and these are the stocks that sell off whenever COVID's gone. How that works, who decides that? I haven't, like Fox. I have no idea why Fox is all of a sudden a stock that's like, it's a reopening stock, and then this is a sell-off stock. It's the weirdest thing ever. Um, Maybe somebody can figure that out for me in my comment section someday. But you would think these would be, there's literally a tab called COVID, but no, this is just weird. Now, this doesn't even make any sense. Because everybody's canceling their AstraZeneca vaccine. What the hell? And then, it's so weird. You would think Moderna would be, or Pfizer would be on top of this, but I don't know. I stopped trying to figure out Wall Street a long time ago. Or figure out why things move the way they do. There's nothing. It's all driven by algorithms. And to be honest with you, I think a lot of the Wall Street traders are just still on vacation, and they're just letting algorithms run the place while they're sitting on the Bahamas or whatever. But we will definitely have to see. So that's just something I'm watching. You can watch this too. You see this start to keep going up. This is really big stuff. Okay, you're gonna see people start to put projects on hold. Because this right here, that's big. That is direct hit on the consumer immediately. So we'll watch. We'll see how it goes. But that's just an update. Right now, this is what I'm getting every year. Right now, previously, as of April 1st, and you can see how much I've put into things that yield higher dividends. So today's 8. In 8 days, I've taken this up $50 without really any further contributions. Literally me just moving money around. But that's how much I've made in 8 days, just from the market going up. Nothing special. I didn't contribute a special, it's not like $1,000 I had sitting around. If you look at it, that's my savings and $25, So, there's no mysterious. 401k has been going up just as much as the 401k has been going up just as much as the market has, because it's in the market. Obviously, it's my 401k. IRA, you can see this. Put these two on top of each other. But there's no crazy amount of money. I didn't mysteriously find a wad of cash sitting on the ground and transfer it. It's just stock market going up, $944. So hopefully it continues. But that's already a great return, at least for me. But hopefully we'll keep watching and see how everything goes. I think the reopening trade is just going to continue. The good news concerning coronavirus, I think, is going to easily outweigh the bad news. So the market is just going to have to face this reality at some point that not everybody's going to buy a Peloton. This is the most ridiculous thing I've ever seen. Like a 7% rally based on what? Germany talking about lockdowns again per week. It's crazy. But that's all. That tells me this is all algorithm driven. So let me know what you think. This is where it stands right now. As it stands, by the time I make my next video, I'll have more money from my paycheck, maybe like an extra $100 I'll put in here. That'll be into something that pays in April, on this April type month. So it'll probably end up being, I don't know what it'll be, QYLD maybe, or PPL. I'll have to see when I get it. Basically, I like to buy on days when things are down. So I would put it into Leggett & Platt today, for example. It's down, so I can get a better price on it, so I can easily catch a quick upside to it. But we'll definitely have to see. I usually decide that day where I'm going to put it, but probably into Leggett & Platt, since they have pretty solid 3.44% yield. They're a very, very solid company. But I don't know. We'll see. Leave any questions in the comments. Y'all have a very nice day.